In today's episode, I'm going to be analyzing the performance of a few of our students here at Warrior Trading. They've sent me their metrics for the past 30 days, and I'm going to look at their metrics and I'm going to give them some feedback. I thought you might enjoy watching me go through this process. Now, for members at Warrior Trading who are Warrior Pro students, we have a trading plan that I give you guys. So as part of chapter 14 of my strategies and scaling course right here, I create a trading plan. This is a trading plan that I use anytime I'm doing a small account challenge. And it's very prescriptive. This is the exact strategy that I implement every single day. Now, what I encourage you to do is to practice this strategy in a simulator. In fact, we even give you access to a simulator with real-time level 2 market data so you can practice in a safe environment before ever putting real money on the line. So when I'm analyzing these metrics, my expectation is that a lot of these students are, in fact, trading in a simulator. They are practicing. That's the right way to do it. You do that for a couple of months until you achieve a certain set of metrics. And only once you achieve those metrics do you graduate to trading with real money. The transition from sim to real money is done very carefully with small share size. Then once you're in real money, you get a couple more months under your belt before scaling up and slowly increasing share size. So as I go through these metrics and analyze them, you'll be able to see students that are in sort of different phases of the learning curve. Some that are in the very first month, they're trading in the simulator, their accuracy is poor, they're not doing very well, but that's okay. They're getting a sense of how the market works. And then you've got people who have been doing this for a little while, their accuracy is improving, and then you have others who are starting to scale up. And then you'll see a few who are still hitting some bumps in the road, and we've kind of got to work through that. Now, at the end of this episode, I'm going to go ahead and review my own trading performance from the last 30 days. And for that, I'm going to do a deep dive. Now, for these students, they sent me their either their metrics or just their performance on a calendar. So I get to see the big picture, which is helpful. But I'm going to do the deep dive on my metrics going all the way in to sort of the back end and filtering through a number of different criteria so you can see what it looks like to do a full deep dive analysis of your trading performance. This is something that's very important to do because you always look at your trading and you say, this is where I'm at today and this is where I want to be. The only way I get there is by taking specific steps, really intentional actions to improve my trading. So I hope you guys really enjoy this episode. Let's go ahead and dive in first with me analyzing the performance of a few of these students. As always, I want to remind you guys that trading is, of course, risky. My results aren't typical, and there is no guarantee you'll find success, whether you trade with me or you learn on your own. So please manage your risk, take it slow, and practice in a simulator before putting real money on the line. Okay, let's go ahead and dive in. All right, that's a nice P&L there. So a little rocky kind of at the beginning, dipping down into the red, nice recovery, a setback, and then a nice recovery. So you're experiencing setbacks, we all do, but you've got these nice recovery periods. So this is actually very typical. I see this a lot. This is kind of the phase of trading we talk about where you're sort of break even. You sort of do this and then do this and then do this. And a lot of people dismiss this phase as being, I'm just not profitable. But actually, you are making money on each of these up ramps. Your problem is that in one day, you give it all back. So the question is, well, you're doing the right thing here. On these days where you're giving it all back, what can we do differently? So you walk away sooner and you don't overstay your welcome, right? That's it. Ultimately, it's trying to cap those red days a little earlier so they don't get that bad. And then all of a sudden, that's when the P&L starts to be more like this, right? The red days aren't giving back everything. They're just giving back a little bit. So that looks good, and Andre, that's really good. And then let's see, here we go. This is another one. So this is beautiful. I love seeing this. You've got 3 red days, tolerable. You're trading with small size. There's no question about it. $11 days, $13 days. This is exactly what I like to see. Whether this is sim or real money, this is good. I mean, if this was real money, it would be totally a great, first or second month of trading with real money, building consistency, proving profitability. And after a month like this, I would be thinking, okay, how can I start to scale up a little bit? Obviously, you've got a couple losses that are a little outliers. They're a little larger, but they're only one trade. And so you had the discipline not to overtrade on those days when you hit your max loss. So this shows really good self-control. I really like seeing that. So that's very nice. All right, so here's another one. So here we're red, second month live, less trades and shares starting on the 17th. So the 17th was right here. So So yeah, it's so tough. So you sort of started with a loss on that first day of the month, and then that Monday, Tuesday. So this was a tough stretch here. I mean, this little stretch here, your accuracy was pretty poor. I mean, 2, 4, 6, 8 red days, and 4 green days. So I mean, I would be sizing down. It sounds like you did size down on the 17th, which is good. So that was a good self correction. And then following sizing down, you had, let's see, 2, 4, 6, 8, 9 days, and you were green 7 out of 9, which is solid. Unfortunately, the loss on this day was a little bit bigger, so that wiped out the whole week. So 4, smaller green days, and then so disappointing. So it's definitely worth looking into this and continuing, I think, with smaller size while you're kind of getting the hang of things. All right, so what about here? What do we got here? Okay, so small size as well. In total, my biggest concern is that these red days are a little bit, too big. But overall, you're keeping your head above water pretty well. So, survive to thrive. I think that's not too bad. Let's see, CT. So what do we got here? Small size, this is good. And, this is exactly what I encourage. Trading in sim with small size, and then when you flip the switch to go live, you keep trading with small size. And then once this is all mostly green, with maybe only 2 red days, then it's like, okay, I've got something that's working pretty well. I'm profitable. It's time to scale up and get a little more aggressive. Jacob, fantastic. This looks great. Really good. The red days are not larger really than the green days. So good ratio there in size. Profitability, accuracy is good. Only 3 red days. I would say 4 is okay, but 3 is great. Less than 4 is great. It's a good month. Keep it up going into May. It's really good. Let's see, what do we have here? So this is a perfectly reasonable early stage kind of month. Are you making a lot of money? No. You're down $160. But think about all the experience you gained across this month. And big picture, you've only got 5 red days. That's not too bad. It so happens that this one was bigger and this one was bigger. So, that's the area where your average red days are bigger than your average green days, which is why you're red, even though you're green more than you're red. But no, that's not bad. Let's see, Sean. Okay. Yep, so it's kind of similar experience there. This red day was way too big. This one was pretty big as well. So the red days are bigger than the green days, but your accuracy is pretty decent. So, this to me speaks to how do I walk away sooner when it's not going my way? This one, did I already look at this? I feel like I did. Let's see, Alex. Nice. A few no trade days, more than I'd expect. But if you're being picky and this is the result, then I would say it's working. Kyle. Beautiful. This is awesome. This is great to see. Okay, so 3 red days in a row. Not a great finish to the month, but it's tolerable. This one got a little bit too big on the red day side. Interesting. Okay. So you kind of got smoked on this one day. Imagine this one day cost you like 40% of your month. That one day. Still a good month, but that one day really got you. So, that's a day where you took 25 trades, which was, quite a few, but where did things go wrong there? Is there an opportunity looking back where you could have walked away sooner? Let's see. Keep an eye on these scans here for a second. All right, Kyle, go. Okay, so this one's more split on the accuracy. I mean, it feels like it's 50-50 red or green. And you got a couple bigger red days. So, if this is real money, I would pump the brakes. I would slow it down, right? I mean, you don't want to be having red days that are quite this big with real money. It's just not with this accuracy. So slow it down. What I would do is I would sort of say, all right, new month ahead. Let's pump the brakes. Let's slow down. I'm going to reduce my share size. If this was my P&L, I would say I got to reduce my share size. I got to increase my quality threshold, focus on higher quality setups, higher quality stocks, and see if for the next month I can get my accuracy a little bit higher, because then you'll have fewer red days. And on these days that are red, can I set some guardrails and parameters to get myself walking away sooner before I go down this much? Because that's a little too much. So we've got a bunch here. Kyle, I already looked at that. William. So again, sort of a similar issue with accuracy being a little poor. There's more red days than I would like, but you're keeping them pretty tight. The net result is that you're green, keeping your head above water, certainly. But I would ask that same question. Can you try to improve that accuracy in the month ahead? Ken here. So this is interesting. A lot of small green days, and then an occasional huge green day, relatively speaking. And another one there. 130, 168 trades. That's a lot of trades. Commission-free broker, I hope, because fees and commissions would be pretty high. Accuracy could be a little bit better, but interested in how you're getting those days that are so strong. Charles, did I already look at this one? This is great accuracy. Only 2 red days. They're back to back. The rest small, steady, green. So if these were my metrics, then I'd be asking myself, okay, well, I shouldn't change a thing. I mean, everything I'm doing here is working. If I want to make more money, I'm going to have to bump up my share size a little bit. But other than that, you've got something that's working right now. This one. I don't know if I saw this one already, but accuracy could be improved. So, keeping your head above water is important. Justin, this is the 80% accuracy. That's fantastic. Average winner, $30. Average loser, 83. So an inverted profit-loss ratio. Can we cut those losers a little faster, I wonder? Jared. Okay, so big picture, red, $1,100. But overall, accuracy could be better. You just got these 2 days that really crushed the month. What happened there? Was that sort of emotional, hijack, or? This is not bad. I mean, granted, you're red, but you're keeping the red days really small, which is good. The green days, you've got a couple that are bigger. Let's see how this looks in another month or two. You're keeping your head above water. You're gaining a lot of experience. You know a lot more now than you did a month ago. That's beautiful. Really nice. Very, very nice. Good job, Andy. Brian, let's see. Okay, so, again, you can see the accuracy is a little poor. You get these sort of stretches of, 2, 3 red days in a row. That's not ideal. But then you get, nice 5 green day streak there. So I think, going back and looking at your metrics, where am I making the most money? What's the type of stock? What's the profile? So when you're in TraderView, you can pull up those tabs, and you can go check to see, what is it that I'm doing well. So you go to detailed. Under detailed, you go to time of day. What time of day am I trading the best? What price am I trading the best? Right? What's the profile of the stock that you're making the most money on? And once you know that profile, then set that as that's what you're looking for. You're now hunting for that setup in the month ahead. All right, so here we go. So Tristan, so 15,000, accuracy 59%, but let's look at that profit loss ratio. 1 to 1. Okay, so this is interesting. 59%. You wouldn't really think you'd be able to pull out quite that much. Average daily gain $800. Okay. 300 trades. Wow. All right. Well, That's quite impressive. Accuracy could be improved. Profit loss ratio could be a little better, but you're grinding and you're doing pretty well there. So can't fault you for that. Gary. Nice. That's awesome. Let's do that again next month. That's great. Now, I know some of you guys would be like, oh, $698. Gary would have made more flipping hamburgers at McDonald's. That's true this month. But if he keeps doing this for 6 months, 8 months, a year, 10, 12 months in a row, invariably he's going to realize if I take bigger share size, I could make more money. So the question is, does he have a strategy that is consistent, that produces good results? Accuracy, profit loss ratio, because then scaling it up is just increasing share size. So you're setting a foundation. That's awesome. Okay, so here you've got one bigger red day, but pretty solid overall. 2, 4, 6 red days out of the month. I'd like to see less than 4. Chase, yeah, more red days than I'd like to see, but the last 2 weeks was better. So was that a shift that you made, or was it just the market? Brian, all right, so 2, 4, 6 red days as well, which, look, it could be worse, but it could be a little bit better. A couple of bigger red days. Chris, all right, so you could just see, looking at the big picture, we're red way too much. So if this was a real money account, I would say, well, fortunately, you're with small size, so the losses should be in the range of being negligible, the total amount. But this speaks to needing to work on accuracy, for sure. Your stock selection process, your entries, your exits, it's just not dialed in quite right. So you got to gain more experience, improve your intuition, and get this sort of flipped where you're mostly green with only a couple red days. Mike, a lot of no trade days here. I don't know if that's because there weren't things that met your criteria or because you were, had other things you were doing, but you're about 50-50 on accuracy. So you're keeping your head above water thanks to small size, but probably want to try to tighten that up a little bit. Yeah, so down a couple $100. All right, here we go. Okay, can't complain about that. So decent, I mean, look, this is the thing. If you were red $600, I would probably say, yeah, all right, you've got 6 red days, 2, 4, 6, 7 red days. And if you're down, you'd have probably bigger losses on average. But, you are green here. And these green days are pretty nice and consistent. And some of them are decent size, too. And 4 green weeks in a row, that looks really good. So it's a bummer that you gave back a little bit on these last few days. The market's cooled off a little bit. So, can you get better at adjusting and taking your foot off the gas when the market does cool down? All right, so that's fantastic. That looks really good. It's just big picture of metrics, up to 15,000. Okay, $179, only 2 red days. I love it. This is great. Big picture, looks good. Okay, so this one moved to 20 shares on week 4, real money. Okay, so look, this is not the accuracy that you want to see when trading with real money, but fortunately, you're doing everything right in terms of keeping share size small and moderate, so you're not just bleeding money, which is good. And transitioning from sim to real money is important because you got to start gaining that you build the emotional conditioning to experiencing loss. Accuracy 56%. So it's a little low. So as long as you can tolerate spending $200 a month, basically on losses, but gaining lessons from doing that with real money, then I'd say that's worthwhile. So here, 504 red weeks in a row. So that's tough. Bigger red day there, bigger red day there. What's tough is that you're only red 5 days. You're mostly green, and you're still red. Your average losers are a little too big. Are you getting stubborn? You got to cut those losses a little faster. Okay. See, this tells a very common story. Small green days, big red days. Small green days, big red days. Small green days, big red days. That's something that we got to tighten up. Definitely. Josh, All right. So don't like seeing, I don't know if this is sim or real money, but I don't like seeing red days that are that big. That is a little bit bigger. The month basically is a wash. So, you gained experience. You didn't go too deep in the red for it, but these types of days really want to tighten up. Red that first week with a bigger loss on the first day, and then, sort of recovered on the next 4 weeks. Green all 4 weeks and that every day in a row. It's not bad. Okay, this looks like way too much red. Yeah, so this, I'm gonna hope that this is sim, because having this kind of red day, there's no question this is a huge learning experience to have a red day that big. And so my hope is that that loss, even in sim, is a lesson. If this was real money, I would say stop trading immediately. Go back to the sim. And if this was real money, it should have been very clear early on that you were going in the wrong direction. And this is actually, sometimes you'll see this where a trader will come in, and again, I don't know if this is sim or real money, but a trader will come in with a big trade like this and get like some confidence, and then all of a sudden they realize maybe that was just beginner's luck, because then by the end of the week, that's gone. You carry that into the next week, even deeper, and then you get maybe a little more beginner's luck. But if that's all that is just luck, then that's not going to pay off long term, right? But sometimes traders, and I see this in the sim, sometimes people will trade with 10,000 share blocks. They'll trade with really big size. And it's like, that can also give you an artificial sense of confidence, because every time you're up 30 cents, you're up $3,000. You're like, oh, this is easy. I'm making $5,000 a day. I'm going to make $1 million by the end of the year. But it's not like that. You got to slow way down. So this is the first one I see that really concerns me. All the others, even the ones that were red, really all negligible, tolerable, whether sim or real money, but within the structure of what I would expect as per the trading plan that's set out for you guys, right? You've got your trading plan of practicing in the sim, then after proving profitability in the sim, going live with real money. You're trading with real money with small size, and then increasing size a little bit each month as you're gaining confidence. So this in the sim would be an unproductive month because the losses are way too big. I'd much rather see someone trading in the sim with 100 shares and being down $290 because it shows more restraint. And certainly with real money, this would just be really bad. And so I would say slow it down, flip back to the sim. If you were with real money, definitely go back to the sim, because this is not working. And you don't want to have 2 more months like this. No way. So you got to go back to the sim. And some people are going to resist that. They'll think, well, I can't make back $29,000 in a simulator. I got to make that money back. Well, now, so you're focused on the wrong thing. Now you're focusing on just making back losses, and you're trading your P&L. Emotion is setting in. And this is how the spiral gets faster and faster and just sucks you in. So you've got to slow down. You got to pay your dues and practice in the sim with small size. If this is sim, and I hope it is, then keep practicing in the sim, but bring that size down and focus on what are your criteria for stocks you're going to trade, and where do you get in and where do you get out, because you don't want to keep seeing months like this. Thank you for sharing. All right, let's see. Kelly, this is better. So 2 small red days, I mean, tolerable. They are a little bit bigger, I suppose. This was a bigger red. In fact, this red week was, pretty bad compared to your green weeks. So it's worth looking at these days, but beyond that, it's pretty good. I don't know. I think I missed a couple in here. So, this is like classic. This is actually classic for the way I used to trade. Be on a really nice streak, and then in one day, it hits the fan, and you are just giving back way too much profit. So I would call this most likely a day of emotional hijack. It could just be terrible luck that you took a trade and it just tanked like crazy. This was a no trade day for me. So on this day, I know I didn't take any trades because I didn't see anything that looked good. So, I don't know what happened there, but at the end of the day, it's still a green month. So it's one of these, big drop on right there at the end, but you still walk away with more than you started. So I'd say that's progress. Diego, okay, way too big of a red day there and a lot of no trade days. But you're keeping your head above water more or less. Let's see. Yep, so this is Sim. These are the metrics right off of our platform here. So you've got, see, this is where you're just trading with too big a size for Sim. It's just not really going to be realistic for what you would want to be doing with real money. I think I already looked at this one. This is why we trade in the Sim. This is good though, because you're in the Sim and there's no question, this is the P&L of, a trader in their early weeks and months of the journey. That's okay. We all start somewhere. This is your starting point. So there's a lot of room for improvement, but that's okay. You're doing this the right way. You're practicing in the simulator and you're going to keep gaining experience every day you show up. So, just take it with a grain of salt for where you're at right now. Okay, so these ones are, yep. I mean, overall, big picture, not bad. Benjamin. Yeah, 5 red days, tolerable. All right, a couple bigger ones, but tolerable. Ryan. Yeah, see, again, the size is too big there on those days. You're in the Sim, but it's still too big. Accuracy needs improvement here. Too many red days. Danny. Yeah. A couple bigger red days. Want to try to tighten that up. Accuracy, 2, 4, 6, 8, 9 red days. 2, 4, 6, 8, 9 green days. You're 50-50. And, your losers are just a little bit bigger, maybe. So this is, you're keeping your head above water. You're learning a lot. You're gaining experience. And stick with it, with the Sim, I hope, just right now until you can have a couple green months. And then once you've got a couple green months, then it's like, okay, now I go live and start to size up. This looks great. This is really good. So if this was Sim, I would say, okay, a couple months like this, and you're going to have a lot of confidence. So if you flip the switch and go live with real money, you're going to be like, all right, I know what I'm doing. I know what I'm thinking about here. I've got a track record that is working for me. So that's where I would get excited. Now, when it comes to my own trading, I'm a little bit of a perfectionist. And this is a trait that I think does serve me well as a trader because I'm not satisfied with my performance. This is a career where there's no such thing as being right 100% of the time. There's always going to be losses. And losses don't have to mean failure, that you did something particularly wrong. It's just sometimes the right setup, everything looks good, and it doesn't work. So this is really a career of statistics and probability and whether or not in total it works more often than it doesn't. But that can be hard for people like me that sort of feel a little bit like black and white with things. And anytime I'm having a red day or I'm struggling, it just feels like this is not okay. And so when I look at my own metrics, I am pretty critical of them. This is what we're looking at here. Now, this is, I'm going to narrow this down a little bit. So this is $16 million of trading profit, all in this software here. It's over 31,000 trades. And it dates back to 2015 or 16 that I started using this software. So anyways, we're going to look at the past 30 days. All right, so past 30 days, actually, we'll just go, do the full month. So there we go. All right, so high level, this is often, well, if we start with the calendar, which is what we were looking at for a lot of students, we'll just start with the calendar. So high level, I don't see any red, and I love that. I love seeing a calendar that's all green. In fact, I'm still upset about the fact that if we looked at my P&L over the last 90 days, I'm in really good shape, except for one day, which was a bigger red day than I would like. This is taking a second to load. Let's see. Let's refresh this page. Oh, there it goes. All right, so we're going to do 60 days, and there it is. So that one red day, and it was a big red day, $28,000 in the red. That is like getting under my skin a little bit because it's like just right there. But a lot of people look at this and be like, this is fantastic. You only have one red day. Who cares how big it is? It's only one. But the perfectionist in me really wishes that day wasn't there and that I had stopped sooner and not let it get as big as it was. So nonetheless, the month of April on the calendar view, really solid month. All right, no red days. So that's the first observation. Green, nice big P&L, some solid trading. Had a fantastic week there on week 4, a really good week on week 2, week 3, and week 5. Well, week 5 was only 3 days, and there was a no trade day. The first no trade day of the entire year. And then there was a day off here. This was a market holiday. So I did miss 2 days in April. One was myself because I didn't see anything I liked, and the other was market holiday. So then I get into the details. And this is where we really understand sort of the composition of where this $474,000 comes from. Okay, so first of all, I look at high level accuracy, 76.7%. That's fantastic. In fact, for me, that's above average. I typically am closer to 68, 70%. So it's well above average, which is great. Average winning trades, $2,300. Average losing trades, $842. So now this gives me a little bit of insight into my profit to loss ratio. And this really is a terrific profit to loss ratio. Generally what I say when I'm analyzing metrics is, and this, again, to get into this level of metrics, you've got to have access to sort of all the trades. So I don't have that for necessarily all of our members. But I could do it for myself, and then now you know what to look for in your own trading. So I generally think of trading as having 3 core components of profitability. You've got your accuracy, your profit to loss ratio, and then your consistency, which is your sort of calendar view of big picture. Are you generally green or red? And so when I look at this, obviously we looked at my calendar and that looks great. We looked at the accuracy. This was 76%. And then we look at the profit loss ratio and it's $2,300 winners. I'll just go $2,300 winners versus $840 losers. So right here, we've got a 3-to-1 profit to loss ratio. So with a 3-to-1 profit to loss ratio, even if I was right only 40% of the time, I would be making money because my winners are so much larger on average than my losers. But with 76% accuracy, I'm doing quite well. So, okay, well, it's easy to see this, but what if you were in a different place? What if you were, one of the students whose accuracy is, 48%, but your profit loss ratio is, maybe 650 versus 840. So it's negative. It's like 0.8 to 1. Now this, unfortunately, you'd have a lot of red days here, and you would not likely be green over this stretch. It's statistically, you shouldn't be green with a negative profit loss ratio and poor accuracy below 50%. So you might say, Ross, how do I turn this around? What should I focus on? And I would say the first thing to focus on is improving your accuracy. So we got to look at that calendar and ask ourselves, why is it that you have so many red days? And what can we do to improve that? So generally what I'll do is I'll say, well, for most traders, even if you've got a lot of red days, you do have green days. So on the green days, I'll say, what are you doing right? So can we focus in on what's working? So right here, as we look at my performance, you can see very clearly what's working. And we're going to start high level. So we're going to start kind of breaking this down. And this is going to give you, in a way, this is almost like reverse engineering what my strategy is by taking the data and letting the data tell us, which is actually really great because I tell you what my strategy is, but this also reaffirms and backs it up that, in fact, that's not just opinion, it's actually based on data. So the first thing that we're going to talk about is price. So what price stock do I make the most money on? All right, so as you can see right here, I am doing the best on stocks between 5 and 10, but I'm doing quite well between 2 and 5 and reasonably well between 10 and 20. And above 20, I actually lose money. So you could say, Ross, don't even trade anything above $20 a share. Now, I will say historically, I have had some very large winners on stocks over $20, including GameStop when we had the GameStop short squeeze. So there are exceptions where I've traded in this range and made money, but the last 30 days was not an exception. The last 30 days I was losing money. And stocks below $2, I also don't tend to make money on. Now, I could get into all the reasons why that is the case, but let's just keep moving on for the time being and just accept that this is where I do the best. So price parameters, we're going to say between 2 and 20 with, sort of an extra focus on the 5 to 10 kind of sweet spot. So we don't do it in quotes. We'll do sort of 5 to 10. That's the sweet spot. All right. So now we have an outline of the price that I do well on. Now, if you did this for yourself and you saw that you were losing quite a lot in this area, then you would definitely say for the next 30 days, I should stop trading anything higher price and stop trading anything that's lower priced. It's not worth it. All right, so that's price. Now let's look at day and time. So day and time, this is just for the past 30 days, I've been doing better on Mondays and then sort of progressively worse as the week goes on, and then the slowest days are on Fridays. Is there a reason for that? What's sort of why is that the case? It seems I trade the most on Thursdays, but that doesn't translate to more profit. I trade quite a bit on Fridays, but that doesn't translate to more profit. And Mondays, I don't trade a ton. I mean, second most, but I do significantly better. And I don't really know why that is. I think that, to be honest, for the last 30 days, that's just sort of the nature of the fact that for this set of data, there were a couple of really good trades on Mondays from stocks that had breaking news. And so that gave me that extra cushion on Mondays. I think if we looked at a greater set of data, we looked at maybe year to date, we would see a little bit of a different picture, right? So that changes a little bit. So you want to be careful, that some of these things may not have a lot of significance. Some may, but some also may just sort of be the luck of the draw. So just something to think about. So I think performance by day of the week, the one thing that I can tell you is that typically my mentality is trading for income. So when I first started trading, I had a goal of making $200 a day. And to give you a little bit of context, I graduated from college during the Great Recession. In fact, I never ended up using my college degree. I never used it on, a job application or anything, because while I was getting my college degree, I was still working at this architecture firm down in New York City. I started there really as like an internship as part of my degree. That was sort of, I got some credit for it. And then I kept working there after I graduated for a little bit. So I ended up graduating into the Great Recession, terrible market. There was no jobs. I decided to move back up to Vermont because the projects that we were doing in New York City at that small architecture firm were kind of wrapping up. So I moved up to Vermont and I looked for some jobs at architecture firms in Vermont. And what I realized was the firm that I didn't really apply, but I was talking to them. They were paying $20 an hour. But that was only if you had your license, that you could stamp drawings. And if you didn't have your license, then it was more like $15, $16 an hour, which is kind of crazy. Now, this was back in 2008, 2009. But when you think about that, it was like, okay, how much more money would I make? Because I was going through this thought process of should I go back to college to get my master's in architecture so I could then try to take the exams and become a licensed architect. And when I realized I'd only make an extra $4 or $5 an hour, I mean, granted, that's 25% more, but for all that college work and still only be at $20 an hour, it was just like, no, I don't think it makes sense. So at that point, I had a friend who had made $16,000 trading penny stocks when we were in high school. And I had funded my first account in 2001. So I was already familiar with trading. I was interested in it. And I said, you know what? I'm going to give this another go. So I set up my account. I started focusing on this daily goal of $200 a day. And I was in a position where I really didn't have a lot of money to lose. So I was so focused on just getting in, getting green, getting out, and trying to build some success. Now, as you may know, my first 2 years was up and then down before finally I basically hit rock bottom. And from that point, made a commitment that I was going to be more disciplined, sort of discovered this strategy I'm starting to outline for you, and really turned it around. So from that $200 daily goal, I've always had this mentality of trading for income, being consistent each day, each week, each month. So at the beginning of each day, I usually kind of test the water with smaller size, get a cushion, and then size up once I'm green. I do the same thing at the beginning of each week. I do the same thing at the beginning of each month. So on Mondays, I tend to be a little bit cautious trying to just get a cushion, but then if something's working, I build up that cushion as quick as I can. But as the week goes on, I start to take my foot off the gas a little bit because I don't want to screw up what has been a really great week. Now, a trader who doesn't care about making money for consistent income and is just, I don't know, being a little bit more like, I'm either going to, YOLO, like hit a huge winner or whatever, wouldn't trade the way I trade. But someone who's trying to be very consistent will. So my metrics kind of line up with that. So day of the week, I am more aggressive earlier in the week and I taper down typically towards the end of the week. Performance by hour of the day. I'm trading predominantly between 6 a.m. Eastern Standard Time and 10 a.m. So this is 10 to 11 a.m. This is by hour of the day. Now, part of this is because of my strategy, which is to focus on trading stocks with breaking news. And news comes out, really, there's two windows when news comes out. The first, and just to give you perspective, so market opens at 4 a.m. Eastern Standard Time, closes at 8 p.m., although there are some stocks that are 24-hour markets. This is the general day. 7 a.m. is when most retail brokers come online, like Thinkorswim. They don't even let you trade before 7 a.m. 9:30 is the official opening bell. And then we have sort of 11 a.m., which is when things start to cool off. And then we've got 3 p.m., and then 4 p.m., and then I'd say like 6 p.m. So in this window here, this is the official, these are the official market hours. And when do companies put out news? They put out news between 4 a.m. and 9:30 and 4 a.m. and 9:30 and 4 p.m. and 8 p.m. But typically within this window, if you looked at the number of headlines, all of a sudden we see a lot of headlines at 7 a.m. and then we see them at 7:30 and then we see them at 8 and 8:30 and then 9. And we see them at 4, 4:30, 5, and then to a lesser extent, sort of 5:30 and 6. And then we sort of fade from there. So if you trade volatility, these are going to be your windows where you're going to see the most news headlines. And so the way I focus on my trading is trading that breaking news. So time of day for me is generally 7 a.m. to 11 a.m. Eastern Standard Time. Now, if I wanted to, I certainly could trade from 3 p.m. to 6 p.m. kind of in this window, power hour into the close. But for where I'm at, sort of in my life, I don't feel the interest in being in front of the computer that long. So I don't. All right, so 7 a.m. to 11 a.m., that's the time that I'm trading. Okay, so now I've gotten a little perspective on time. So now let's look at so price and volume. So we looked at price already, and actually we're gonna look at instruments. So these are the stocks I made the most. These are the stocks I lost the most on. We could analyze each of these stocks, but what I'll tell you from my own knowledge is that I do best on certain types of stocks. So stock type, so biotech. And then we do often get some good momentum on China stocks, Chinese companies. But biotech really far and away are some of the ones that I do the best on. But we also know float, the number of shares outstanding, under 20 million shares. All right, this isn't a metric that's in this software here, but it's something that I know to be true. Today, the stock that I'm up the most on, we could just check the float on it. Zcar, 384,000 shares. It's up 289% right now, and I'm up 33 grand on it. So this stock, time of day, I mean, everything pretty much fits in on this stock with what we're talking about. Now, performance by instruments volume. So notice that I make more money when the stock has more volume. And there's also something very interesting here that I make more money when the stock has 5 times higher volume than its 50-day average. So why would a stock have 5 times higher volume than its 50-day average? Because there is breaking news. We've got a catalyst. So let's mark these out. All right, so volume, let's see, 5 times above 50-day average. And now news, yes, ideally. Now, not always, but generally speaking, news that we have it. So now you're kind of getting a sense of the type of stock that I'm likely to trade. Between 2 and 20, between the hours of 7 a.m. and 11 a.m. with a biotech Chinese sector, under 20 million float, 5 times relative volume, and has news. So this is the type of stock I'm typically going to be focusing on trading. All right, now if we look at these metrics from just this past month, you will see that I had a couple trades on lower volume stocks and didn't do as well on them. Sometimes what will happen is, because my strategy is to trade volatility and to trade breaking news, when the news first comes out, I have to make the determination of, is this news good and how much is the stock going to go up? And sometimes I'm wrong. Sometimes I'm really right on, where I jump in the stock and I'm dead on, and this stock's going to end up going up 400% on the day, and I might be one of the first traders that are in it because I saw that news as it crossed the news wire, as it came out. But other times I trade a stock that has news right as it comes out, and then nothing really happens, and I take a loss, or it's a break-even trade, and so the volume doesn't come into it because other traders realized maybe that news wasn't so good, and I was just wrong. And so that's, part of the thing that I have to accept, that I'm not going to be right 100% of the time, and that's okay. So MLGO, this happened to be a stock that I found to be very difficult to trade. MLGO, SLSN, DATS, USAR, and SAGT. SAGT happens to be a recent IPO. These can work, didn't happen to on that trade. Recent IPOs, though, can be good. But these are stocks that are very volatile. So that volatility, works well, but when you get it going the wrong direction, it can be pretty painful. So this gives you kind of a big picture on my metrics. And now and the type of stocks I'm going to trade. And now let's look at UPXI for a second. So this is one of the stocks that I did particularly well on in just last month. And if we look at this stock, this is a stock that went up over 1,000% in one day. 1,000%. And so what you see is this big squeeze up. And then what do you think I did on that pullback? I'm a buyer down there. Another rally up, another pullback. I'm a buyer down here. Another rally up, another pullback. I'm a buyer down here. Another rally up, a small pullback. And then, trading it sort of to a lesser extent in this area, even though it pushed higher, sort of taking the risk off as we go further into the morning. So I ended up making over $50,000 on UPXI on that particular day. And it was trading these really simple patterns, buying the pullback. And so I'm a big advocate of not overcomplicating it. This was on, this $55,000 I made right here on the 21st. And I took only 21 trades. The next day I took 10 trades and made 61,000. So I'm not over trading. In fact, I might even be under trading a little bit. But remember, every day you're doing one of two things. You're either leaving money on the table or giving back profit. And I'd rather leave a little money on the table, but know that I'm walking away with profit in my pocket. So as part of my strategy, these are the stocks I'm going to trade. And then what's the pattern that I'm going to focus on? I'm going to focus, and by the way, I'll show you the pattern. But by the way, when it comes to that accuracy, this is what you want to make sure you're focusing on. A+ stocks meet all of these criteria right here. If it's B quality, then one of them is not included. So C quality, 2 of them are not included. And you don't want to trade anything less than C quality. So A quality meets all of these criteria. B quality meets all except 1. And then below that is you're starting to get into trouble. It's not worth it. So my belief is that if right now you're struggling with poor accuracy, your calendar is red, the first thing to focus on is improving accuracy. Because when you improve accuracy, what happens? Your accuracy goes up. Invariably, you have fewer losers. And so typically, because you're being a bit more picky about the quality of trades you're taking, you're eliminating some of what were probably the worst offenders that created big losses, which means your profit-loss ratio is typically going to improve just as a nature of you're focusing on higher quality stocks. Profit-loss ratio improving, what gets better? Your calendar, your consistency. So now you've got more green on the calendar. You've still got some red here and there, and having, 4 red days, 5 red days, okay, you don't want to have too much more than that. So now you start getting better consistency, and that makes you feel confident taking more trades and taking bigger share size. And you do all that, and you're making more money. And so this becomes a positive feedback loop, and it all begins right here with accuracy. So accuracy requires you to trade A quality stocks, but then also focus on making sure you're taking these A quality setups. So one of my favorite setups, which is the same one I just showed you on UPXI, is this pullback pattern right here. You get a little bottoming tail, first candle to make a new high, and then boom, we're riding that wave the next leg up. So here's what I would say. This has been hands down my favorite and highest accuracy pattern that I use in my trading. Buying right there for first candle to make a new high. So all of my students at Warrior Trading, as part of chapter 14, you get this trading plan, which includes these types of stocks, which are the ones that I do the best on, focusing on these patterns. And the goal is not to trade everything that moves. It's not to take every single setup that you see. It's to focus on getting really good at just getting your niche, a small handful of stocks that you would trade based on breaking news, and a small handful of setups focusing on nailing one first, getting it down, and then adding more as you continue. So what I'm gonna do for you guys is I'm gonna put a link, and it'll be in the description and also pinned at the top of the comments, where you can do a 2-week trial at Warrior Trading and actually watch over my shoulder for 2 weeks and get access to a handful of classes and see what it's like to be a member of the community. Now, for those of you guys who have already done a 2-week trial, then by all means, we're ready for you to become a full-fledged Warrior Pro member, and we'd love to have you guys join. And the other thing that I'm gonna do is I'm gonna put a link at the end of this episode for a couple of videos that I think you guys will really enjoy. So if you wanna get better at learning how to read candlestick charts, you wanna get better at understanding the best places to buy and the right places to sell where you're not leaving too much on the table, make sure you check out those episodes. And thank you guys as always for tuning in. Reminder, trading is risky. My results aren't typical, so please manage your risk, take it slow, and I'll see you for the next episode real soon.